What is up, everybody? It is Joe here at budgetboss.ca. It is Monday. It's the 13th of April. We're almost halfway through the month, and we are officially halfway through my COVID campaign for financial awareness. And today, I'm hoping you guys had an amazing Easter. I hope you got to enjoy a bit of time, possibly a virtual conference with your family members or loved ones. The munchkins inside the house, if you're stuck inside, hopefully you enjoyed your time with them. Me, I spent my day yesterday cleaning. Normally it would be a big, beautiful Portuguese dinner, but it was not because that is not what we're doing right now. We're isolating, and that's a good thing. We're trying to stop the curve. So, Day 16, COVID campaign, financial awareness. I'm going to jump into a subject that most people don't like to jump into. It is life insurance. And in case you don't know, I sell life insurance. And I am very passionate about life insurance. I think everyone should have life insurance. But who am I? Why is my opinion so important on this? So today I'm going to go over why everyone should have life insurance. Over the next couple days, I'm going to explain different types of life insurance and the process of applying for life insurance and making people understand how easy and simple it is to get life insurance. But today I'm going to focus on why it's so important to have life insurance. Now, because it's 7:45 in the morning, markets aren't open, so I'll do a quick market recap of the futures market to show you what we could expect today. Last week and the week before we had positive weeks, so today we are looking at a market that will probably open negative. We will see how negative, but overall we are probably going to have a negative start to the market. That doesn't mean that it'll finish the day like that, but we may give back some gains that we had over the course of. Let's remember that we've gained about 12 to 15% over the past 2 weeks. We are still down about 20% overall from our market heights that occurred about a month and a half ago, beginning of March, end of February. So we are right in the thick of this financial downturn in terms of the markets. We are hoping that they bounce back as quick as possible, but a lot of that will be dictated upon when we sort of reopen the economy, which probably won't happen right away. Obviously, April's a write-off. I'm guessing that we were going to go through at least part of May, halfway through May, if not the whole month of May, and they're going to probably stagger the open of certain things, aspects of the economy. Certain aspects I feel will not be the same for a long time, including restaurant industry, public places, bars, things of that nature. Public gathering places that have more than, say, 50 people or so probably won't be the same maybe for the whole summer. So we got to be ready for that. But yes, we're looking at a possible negative opening to the market to start the week. Hopefully we do have another good week and we get back some of the losses that we've had overall and continue along the trend of market growth that we've seen over the past 2 weeks. So I want to go into something, a clip of one of my favorite personalities that I follow, MJ Harris. Now, MJ Harris owns a financial company. He actually, they deal with life insurance. He's sort of become more of a character, personality, talking about love, life, talking about empowerment for himself, for men, women, like trying to get yourself to a better state of mind. MJ Harris is a really interesting cat, and he actually goes off on why life insurance is important in this clip. So let's listen to this clip, and then I'm going to get into why I think life insurance is important. So we'll start with the clip, though.
If you have breath in your body, you need life insurance. That's the bottom line. I hear people tell me sometimes, oh, I don't need life insurance, I'm fine. What I want you to think about is this. If you have that belief, if you are watching me right now and you have that belief, then what I want you to think about is the fact that coming into this earth, so being born and dying, cost money. Unless you plan unless you were born in a field, right, and you plan to die without a funeral or anything else like that, it costs money. So at the very least, having life insurance in place is a way to make sure that you are able to take care of your own final expenses, because by making the choice not to have life insurance, you're making the choice to say someone else will handle what I should have been responsible for. People in a lot of cases don't even have the room to grieve because their loved one didn't plan accordingly for their own death. And so what ends up happening is that now they're dealing with the unexpected death of a loved one, because most of the time death is unexpected. So they're dealing with the unexpected death of the loved one, but they can't even grieve properly because now they have to deal with the financial burden that comes with having to take care of expenses that someone else could have taken care of themselves if they made a practice choice. You know, I get it. I get it that thinking about your own death and thinking about life insurance can feel morbid for some people. I get that. But what I want you to think about is also, is it harder to think about your death than it is to think about your legacy being irresponsible, your legacy being that you left financial burdens for your family, your legacy being that because of the choices that you made within your life, you set together a scenario where one of your family members is facing bankruptcy, could be facing bankruptcy because of the expenses you left behind. One of the number one causes of bankruptcy, one of the leading causes of bankruptcy, is the final expenses that are left behind when someone dies. Is that what you want your legacy to be? I think it's pure selfishness. I really do believe this. I believe it is pure selfishness to say that because you don't want to think about death and think about insurance, that somehow or another you're going to avoid thinking about it and leave the burden to someone else. Beyond that, when we think about these groups out here, ethnic groups, racial groups out here who continue to transfer wealth between generations, sure, intergenerational wealth is created from building businesses and things of that nature, which is why I encourage people to start businesses. No matter what you do, have multiple streams of income. But also a huge way to transfer wealth between generations is through insurance. You know, because for pennies on the dollar, literally, you are able to create wealth for that next generation to have so that they can have a life that's easier than yours. If you are a parent, if you have anyone who's dependent on you, for me, I don't have children. I've got my nieces and nephews. And when I think about them and think about the lives that I want them to have, the ability for them to not have to use a credit card to start a business like I did. I had to run up my credit to start National Care Financial Group. I had to scrape and I had to struggle a little bit because I didn't have a lot of extra money to be able to do it. When I think about wanting to create a better platform and a legacy of being able to create wealth for my family, having insurance in place enables me to do that. That way, no matter what happens to National Care, if National Care fell apart tomorrow, I know I've got my policies in place that can still allow me to create a legacy for myself. So that's really what I say when I think about life insurance, is if you have breath in your body, if you have a desire to create a legacy for yourself, there's something other than being a burden and creating debt, you need to get life insurance. Period, dot, end of story. And here's the other thing, just to throw this in there as the kicker, the clincher, as they say. People say, well, I don't know if my health can do it. Let me tell you this. Insurance companies are in the business of making money, which means that they want to issue policies. I don't care if you have HIV. You can still get up to $2 million in coverage through National Care. You can, absolutely. I don't care if you have diabetes. You can get it. I don't care if you have high blood pressure. Right? So saying I'm afraid that my health is not good enough, that's an excuse. Pick up the phone. It's not over until you're told that you're denied. And I can almost guarantee you that out of the 106 carriers we work with, we can find somebody that can help you.
So that is my boy, MJ Harris. And he goes through a lot of things in there. He's very passionate about life insurance, and I am as well. He actually... One funny thing is pure selfishness. He says that if you don't have life insurance, and I would tend to agree. I'm in the middle of a death claims process right now. I deliver death claims upon life insurance. So when someone dies, I arrive with the check. Part of my job is selling life insurance. Part of my job is delivering death claims of people who have passed on and claiming on the life insurance. So I'm there on every stage of the process. And when he mentioned that people don't have time to grieve, it is absolutely 100% true that they don't. I arrive oftentimes the day after someone passes away. I've arrived the day of when someone passed away. And when someone dies, there's a whirlwind of activity that is going on. Everyone's reaching out in terms of what do we need here. So we got to come up with plans in terms of the funeral or cremation or burial. We have to come up with plans to tidy up a person's financial obligations. So we have to talk to the bank. We have to talk to the government to get the government death benefit and close off any sort of government accounts that not have. There is a whirlwind of activity, and it is not an easy process to deal with. In fact, the easiest process to deal with when someone dies is actually claiming on the life insurance. Within a week, I arrive with money in hand for the beneficiaries of the life insurance policy. Everyone else is reaching out and asking for money. The lawyers are asking for money. The bank's asking for money. Government's asking for money. Family members are asking for money. Everyone's asking for money. The only person that is not asking for money and bringing money is the life insurance agent. And to have that right away come to a family in a time of need is huge to me. Where it actually is super, super useful is that winding down an estate can take months, sometimes years. I have a friend of mine who's dealing with this right now, and it's almost been 3 years, and they still haven't fully wound down her father's estate. And it's very sad that every email, every letter that they get from the lawyers is just another jab with the passing of her father. And it's like, okay, can we just put this to rest? Just end this. The thing that came right away within a couple weeks was the life insurance, and it paid out immediately. So lots to develop, lots to like sort of take in within that video that MJ had. There's a lot to sort of absorb with that, but the big thing that he sort of went into as well is the selfishness factor of it. I think it's important to take care of your obligations. If you have debts, to cover those off if you're to die prematurely. You don't want to leave those to someone else. If you don't have debts, to make sure that your financial obligations or your funeral or whatever may happen when you pass on is covered. To come into my place right now and actually clean up after I pass away if I leave the earth prematurely would be an issue. My parents will probably have to take time off work to do that. It will be a burden upon them, and I feel that they should be financially compensated for that burden. And that's why I have life insurance, even though I don't have a wife and I don't have kids. I feel it's necessary to leave money to my parents to make sure that they're financially secure when I pass on, if I leave prematurely, if I predecease them. Now, they don't even need that money. They are secure in their own right, but it is me taking it upon myself to make sure that they are compensated for the time and effort they've put in with me in my lifetime, and that they will have to put in if I die prematurely. So I wrote a post, and I'm going to get into it right now. I have 2 posts that I'm going to share with you today, but share also 3 more that you can read on your own accord. 4 of them are from me. 1 of them is from Forbes about life insurance. And this post is called "The One Financial Product Everyone Should Have." So obviously, we're talking about life insurance. The one financial product everyone should have is life insurance. And this is my post, my opinion, and the reason why I think everyone should have it, and I go through several reasons, is because it's about taking responsibility, and it's about actually being prudent with your finances and your life. So one thing I say I get into here is not a question of if you should have life insurance, it's just how much. That's the issue. So me personally, I have $500,000 worth of coverage. It's term insurance, and that would be left to my parents should I pass away. Oftentimes, term insurance is a great way to cover a gap for a cheap price. I sell lots and lots of term insurance. I'm going to get into different types of life insurance tomorrow, permanent insurance and term insurance. Today, I'm just going to get more into the reason of why you should have it. So people often say, well, if I'm very rich, why do I need life insurance? You often need life insurance to cover off estate taxes or to leave money more efficiently to your loved ones. So the very rich often have the most life insurance. So that itself is not an excuse as well. So number one reason why I believe everyone should have life insurance, or it's the most important financial product, is it's important. So why? Why is the question. So one of my fundamental principles is that no one should have to pay for me once I'm gone. I don't want to leave a burden, and MJ talked about that in that video. I don't want to be a burden on anyone, whether I'm here or not here. That's huge. GoFundMe pages pop up all the time with people asking for money donations when someone passes on. And these are people who obviously did not have life insurance, because life insurance provides money when you die. So if you die without life insurance, you will see GoFundMes pop up all the time. Can we help bury this person? Can we help raise money that we paid for this person? That is sad, but it's a reality. And the financial impact of death is huge, and a lot of people are just ill prepared for that. It's cheap. Life insurance is very, very cheap in comparison to the cost of actually leaving behind a financial burden on anyone. Life insurance is dirt cheap. My insurance is slightly more expensive than anyone else's because, or anyone else's in my position, my age bracket, and the level of insurance I have, because I am considered a high risk applicant. So I pay a little bit more. But generally speaking, for healthy individuals, life insurance is dirt cheap. I have clients that spend $13 a month, $13 a month for $500,000 worth of coverage. $13 a month. That is the cost of a beverage at a bar. That is the cost of a meal at McDonald's or Subway. It's so insanely cheap. I insured. I mentioned in this post. I was able to provide insurance for someone for the cost of one pizza. It's actually dirt cheap. And as you get older, it gets more expensive. But when you're young and healthy, it is insanely cheap, and there's no reason why you shouldn't get it in terms of cost. It can save you money. So why? How can life insurance save you money? So if you have investments, if you have emergency funds, dipping into those if someone passes away to actually cover expenses or pay for raising of children or to pay for a mortgage, stuff like that, those actually are not meant for that purpose. And if you have life insurance, it can save you money and actually help your investments continue to grow over time. You won't have to dip into your emergency fund. You won't have to dip into your RSP or tax-free savings account. You don't want to use your home equity to cover off final expenses. That's huge. So leave those investments intact. And if you have life insurance, paying, say, 20 to whatever it may be, $50 a month if you're a bit older to cover off those expenses should you pass away too early is the prudent thing to do, because you want to make sure the plan in place lets those things continue to grow over time. And there's a lot of people right now that are asking to withdraw from their RSP or their tax-free savings account because of the COVID-19 crisis. Now imagine if someone actually passed away. That will be magnified by tenfold. So that's a huge one. Um, it's the cheapest way to actually cover off these expenses. Co-signing. So, for instance, a lot of people who are younger feel, well, I don't have any debts that, like my debts are all on myself. Yes, but did someone co-sign for me? Did someone co-sign for your student loan? Did someone co-sign for a line of credit that you have, or your car, or your home? You got to remember, when you drive a car off the lot, it loses resale value immediately. So you now owe more on that car than it is worth. So you need to understand that parents co-sign for you, and although they may be set and not need your money, do you really want to leave the burden of someone who co-signed for you? That is something that a adult would do. Make sure that someone who co-signed for is covered and made whole if they pass away too early. Life insurance is better than what the bank offers. So if you have creditors insurance on your credit card or on a line of credit or on your mortgage insurance, you want to make sure that you get personally owned insurance, because it's better than what the banks offer. It's more dynamic, it's often cheaper, and it allows you to do what you want to do with it. You can take it with you. It doesn't decrease in value as the value of your debts go down, which hopefully they do because you're paying them off. That is why it is so much more better than bank insurance. And there's also one thing called post-claim underwriting, where they underwrite or make sure you're insurable after the fact. So after you pass on, they see if you qualified for the insurance. That is a dangerous game to play, because if you technically didn't qualify for the insurance, but they gave it to you, you now have insurance that you do not qualify for but are still paying for. And then when you die, it doesn't pay out fully. It only gives you back your premiums. So you want to make sure you know you have the coverage right away. And that is post-claim underwriting. And I speak about that more in different types, in different posts I have. And I'll talk about that more throughout the week. Another one here, it's tax-free. So leaving money in life insurance to someone else is tax-free. There's only several avenues you can leave money to someone tax-free. If I want to give money to my parents after I die, tax-free, I can put it in my tax-free savings account, which I recommend everyone should have. Life insurance is another one, and home equity or the sale of your principal residence, principal residence only, is tax-free. This is the only avenues you can leave money to someone else tax-free. Anything else leaves a taxable burden upon your estate or upon the income of the person receiving that at the time of death. So it's a great, great place to actually put money. And this is why rich people actually have the most insurance, because it is the avenue that they can leave money to their kids or whoever, a charity, whoever they may choose to leave money to, tax-free. And that's massive. And that's why people will think, well, I have investments, I'm self-insured, I don't need insurance. Well, maybe life insurance is the best way for you to actually leave a legacy and more efficiently do it by making it tax-free as opposed to a taxable burden upon death. So that's a huge factor as well. Your workplace coverage is not enough. So people who've been laid off, do you now have workplace coverage? You think you do, but now you don't. There are people who only get 1 or 2 times their income. So even if they make $100,000 a year, they only have $200,000 in insurance and yet have a $500,000 mortgage. Your workplace coverage wouldn't cover off that mortgage. Also, you can't take your workplace coverage with you. So if you leave your job, you now have no insurance. If you're self-employed, or if you leave your job and become self-employed, you now have no insurance. If your workplace changes the coverage, you're at the whim of that. Collective bargaining between your union and the actual workplace can change the coverage. As you get older, your workplace coverage becomes more expensive because you are paying for everyone, and it's 1 year renewable insurance. So every year you're freshly underwritten. Whereas you can lock in your insurance with term insurance over a longer period of time, 10 years, 20 years, 30 years, even up to the age of 65. You can make permanent coverage so your price never goes up for your whole life. So that's why your workplace coverage is not as dynamic. It's not enough oftentimes. And most of the time, as you get older, it becomes more expensive than personally owned term insurance. Why? Because you don't do a medical, so you are paying based on age only. They don't have enough health information on you, and that added risk because they don't know if you're healthy is making it cost more for you. So you're paying for the people you work with that have cancer. That's basically how that workplace insurance works. So as you get older, it becomes far more expensive, your workplace insurance. It makes business sense. So oftentimes with life insurance or owning a business, you want to make sure that you have a buy-sell agreement in place. So for instance, me and a partner own a restaurant together. If I die, does that my wife now become the partner of my partner, or vice versa? If he passes away, do I become the partner with his wife? The reason why you need this buy-sell agreement attached with life insurance is to make sure that if someone in that business arrangement does not make it, passes away too early, then you can buy the other person's spouse out. That is huge, and every business arrangement should have this. If there's joint debts within the business, you want to make sure that if someone passes away, those debts are covered, including mortgages or lines of credit or loans that the business has taken out. You want to make sure that those are covered as well. It makes business sense because businesses fail oftentimes without proper buy-sell agreements. They get dissolved because they can't come to an agreement between the surviving business partner and the family of the dead business partner, and that is a shame. You want to make sure that you're prudent and you're moving forward with the business no matter what happens, whether it be injury, illness, or death, and you want to make sure that that plan is in place. And the only way to fund that, unless you have a huge amount of cash sitting around, which most businesses do not, especially when they first get started, is life insurance, and that will help you fund the buy-sell agreement. It's easy. I do life insurance applications on a weekly basis, helping people do it. And I can do it over the phone. I can do it in person. Right now, we're doing it over the phone, obviously, because of COVID-19. But it is so blatantly, unbelievably easy to get life insurance. It doesn't take long. Oftentimes, you don't have to do a medical, so you don't need to get blood or urine. You don't need to get your blood pressure taken. All you have to do is answer the questionnaire truthfully. As you get older, yes, they have to investigate a bit more to make sure you don't have chronic illnesses or diseases, but it is so incredibly easy. It's actually easier to get life insurance than it is to open up a checking account, to be totally honest. So there's no real excuse in terms of difficulty level. Now, back in the day, it used to be much more difficult. I'd have to come to your house. I'd have to take a swab from inside your mouth. It was very invasive and very intrusive. But as people's life expectancy has gone higher, life insurance companies have realized they don't need to do as thorough underwriting for younger, healthier people because it costs them money to do that underwriting. So it's a waste of their time and money. Might as well underwrite the insurance based on the person answering the questions, and then they can investigate that afterwards if the person actually lied on the life insurance. So the most important thing is be truthful with your application, and you will get the proper insurance that you need. And it's about being adult. This is adulting 101. Like, this is the biggest thing that you need to understand, is that adults buy life insurance, and if you don't have life insurance, you're technically not acting like an adult. And MJ gets into this in that video where he says it's just pure selfishness. I agree, it's selfish. You need to cover off your expenses, whether it just be purely your funeral or any sort of loose ends that need to be tied up, and you need to cover off your debts. You don't want to leave that behind. And I've seen the flip side of it. I've seen life insurance save family homes from going into foreclosure, and I've seen people lose their family homes because the spouse did not have life insurance. I've seen both sides of it. So you need to make sure that this isn't me just trying to sell you life insurance. This is reality. This is pure reality where people actually become financially destroyed when a spouse dies without life insurance. And to cover that off for something as small as $15, $20, $30, $40, or even $50 a month, even $100 a month, to me is adulting 101. And you want to take responsibility for yourself and taking care of your family should something happen to you. So I think the number one reason, though, why everyone should have life insurance, especially young people, is that it's the cheapest, most effective, easiest thing you can do to get your financial plan in motion. The mentality of buying life insurance is huge. If you actually can get into the mentality of putting money away that you know you will never benefit from, you don't buy life insurance for yourself. You buy life insurance for your loved ones or for the people around you. If you cannot get into the mentality of putting money into something every month that you may or may not touch, then you will never be wealthy. And this includes your investments, because you may not make it to retirement. You might save all your money, and then the day before you're ready to retire, you could die. It's happened. It doesn't happen often, but it could happen. So you need to get in the mentality of, I'm putting money away and I'm never going to touch it. Because if you get into that mentality, especially at a young age, you will be wealthier than you could imagine. And that's what I think the biggest thing with life insurance, and especially life insurance with young people. You need to understand that this is delayed gratification. You are not going to benefit from this. And saving money actually hurts. Paying life insurance premiums hurts less than saving money. It costs far less than saving money. You need to save far more to get to a proper retirement than you need to pay on a monthly basis for your life insurance. And that is a mentality that people need to get into. That a way that I may not touch. And that is the biggest thing with life insurance that I think makes the most sense for getting it. Getting into the mentality of putting money away that you will not touch. That mentality will make you very wealthy. So this is a post. I'm going to quickly get into this one from October of 2018. 11 excuses not to get life insurance and why they're BS. BS stands for bullshit. So why they're bullshit? I'm healthy, so why do I need it? It's actually the best time to get life insurance is when you're healthy, because it costs more if you're not healthy. I pay $85 a month for my life insurance for $500,000, and it's because I have a chronic condition. People my age actually pay about $21 a month for the same coverage that I have if they are healthier than me. So healthy is the best time to get it because it's the cheapest. You cannot get it if you are super unhealthy, or there's limits on what you can get. So you want to get it when you're young, you want to get it when you're healthy, and lock in that price. I'm young. Why would I need life insurance? Again, getting into the mentality of putting money away that you will not benefit from is what will make you wealthy in life. Again, being healthy and young is when it's cheapest. The $13 a month policy was a 22-year-old with $500,000 worth of coverage. 22 years old, $500,000 worth of coverage, $13 a month. I just mentioned 10 years later, I got my coverage for $85 a month. For the same amount of coverage in the same duration. $85 versus $13 because she's younger and healthier than me. So yeah, when you're young, that's the best time to get it. My work has insurance. I went over that in the last post. Yes, your workplace has coverage. Yes, but it's probably not enough. You can't take it with you. When you turn 65 and retire, you don't have it anymore in most cases, or it reduces to a small amount that may or may not be enough. Workplace coverage is not dynamic, and it often gets more expensive as you get older. Your bank covers you. No, they do not. No, they do not. They cover themselves. You cover yourself with life insurance. Bank covers their debts or your debts with them. They pay themselves with the life insurance that they provide for you. So you need to understand this. I rather own my insurance and pay less for it than what the bank is charging me for their garbage insurance that may or may not cover you. So yes, the bank, they do not have your back. They're covering your debt so they get paid when you die. I'm a single person. I'm a single person. So this is an excuse why not to get life insurance. I am a single person and I have it too. But single people die, and single people die all the time, and single people still leave financial burdens. I will leave financial burdens upon my loved ones when I die. That is my funeral. That will cost that. So the best amount of insurance to get for a single person is to cover off any expenses they may have when they die, and also covering off any sort of debts they may have that could be jointly owned with someone else. That's a huge one. And also, do you plan on being single forever? If you plan on being single forever, maybe that's your goal, but over time, as you become older, you could become less healthy, and therefore insurance could cost you more. So being a single person is not a good enough excuse, because unless you're planning on being single forever and then going off into the middle of the wilderness and dying on your own and burning all your possessions before that, then there is no reason why you shouldn't have insurance. You have investments, yes, but there are the investments supposed to be used to cover off your debt. Your investments are often used for specific purposes like short-term savings, long-term savings such as retirement. Your home equity is to actually build up the value of your home, not to borrow from. I go through that in Relevant Retirement Step 3, where home equity is not a piggy bank for you, especially not to cover off the death of a loved one. Investments are not there for that purpose. Life insurance covers off that need. Investments shouldn't be drawn from, and oftentimes when they're drawn from, it's at a negative position, such as right now the markets are down. You do not want to be drawing from your investments right now when the markets are down, but people are doing it because they have nowhere else to turn. And having life insurance is a position where you don't want to draw from these investments when the markets are down, and that could happen when someone passes away. Anyone that passes away right now and then investments need to be drawn from to pay for their funeral, pay for debts, that is going at a loss. So you've now bought high and sold low, which is not a good way about going about your investment strategy. So I have investments, not a valid excuse, or not a valid excuse to not get life insurance. I don't want anyone getting rich off my death. Life insurance is not about getting rich. The ones who actually help people get rich are the ones who buy massive policies, and they're transitioning wealth from one generation to the other. The average person, life insurance is just making sure that everyone left behind stays whole. No one will get rich off your debt or your death. They will basically be able to pay off debts and actually continue on with the lifestyle that they had beforehand. If you don't have life insurance, that lifestyle is in jeopardy because you did not cover yourself. So no one's getting rich off life insurance. What people are doing is allowing themselves to cover any expenses and live the life that they had before the person passed away. So yeah, don't look at it that way. It's too expensive. Not true. Life insurance can be very, very cheap. I mentioned it before, $13 a month for $500,000 worth of coverage for one client of mine. Not an excuse. And you don't have any money? Well, if you don't have any money, can't get blood from a stone, but also may I suggest that your priorities are not in the right place. Honestly, if you are spending money on Starbucks every month but don't have life insurance and then complain that you don't have money, then you're not going about your finances the right way. You need to prioritize your money, and one of those priorities should be life insurance. And you're not healthy. Well, I'm not fully healthy either. I mean, I'm not dying. I don't have a life-threatening illness, but I do have a chronic condition, ulcerative colitis, which makes my life insurance cost more. I'm not healthy is not a valid excuse, and MJ Harris mentioned in the video, even if you're HIV positive, you can get life insurance. Even if you have cancer, you can get life insurance. It's just a matter of cost and amount, but you can get life insurance no matter what. So don't use the I am not healthy as an excuse. I have carriers that I deal with that insure unhealthy people, even people far unhealthier than me, and that's who I have my insurance from, because the company that I represent will not insure me because I'm high risk in terms of that. So I am healthy is not an excuse. So what I'm going to include in this post as well is how to retire relevant. Step 4, this is my relevant retirement system. Step 4, that's all about insurance. I talk about different forms of insurance. I talk a little bit about life insurance in that one because there's several forms of insurance you'll need. I'm also going to include this post, which I'll be talking about more tomorrow, term versus permanent insurance, the great insurance debate. I'm also going to include my 6 point focus on wealth, where step 4 is life insurance, so that's a huge one. And I'm going to include this post from Forbes. Yes, you probably need life insurance, and here's why. Just so you realize that it's not just me saying these things, everyone's saying these things as well, or other people are saying these things as well. So I want you to check out Government Canada's COVID disease CERB benefit. If you have not applied for it yet, please apply for it. Get those benefits that you need to keep your financial house in order while we're learning about finance during this period of time and we have this downtime. You can also check me out on Facebook. Best place to check me out is Facebook and YouTube. Reason being is because I have all the links loaded onto this, and they're hot links, so you can actually click on them and go live to them. So that's Facebook. This is the YouTube page, the catalog of videos during this period. This is the 16th video, so all of them will be up on YouTube. And you can also follow me on Twitter, of course, at Joe Budget Boss, and Instagram as well, at Joe Budget Boss. Download the combo expenses worksheet. Hundreds of people have done that. And you can contact me as well, book a meeting, or just sign up for the email list and get emails from me on a regular basis. Book the meeting and you can talk to me about your finances and go from there. So I want everyone to have an amazing week. We are midway through the month. We are midway through this lockdown period. Hopefully we can get rolling through this, and maybe the mid part of May we will be back open and out to do more things than we're doing now. I'm hoping that we get our full summer back in. So continue to isolate, continue to shelter in place, continue to physically distance yourself from other people that you don't live with, and continue to try and keep sane and try and keep happy during this period. So have yourself an amazing week. Peace.